Rip and running down the night. Rip and running, wishing you were by my side. Welcome to my channel. Thank you guys for watching me today. As promised, I'm doing a 5-part series talking about finances. So this past couple of weeks, I basically been talking about having a savings account. Then I did an interview about home ownership, and today I'm doing it about stocks with everything's going on. Of course, we all see the stock market crashing and everybody's trying to figure out how can they invest. So that's why I got Troy here with me today to basically give us some insights on that. Troy, if you can just basically tell us what got you into investing, what made you get started, a little background information.
So what got me into investing, really, what I wanted to do was find a way to build up my residual income. So I started researching different things. Of course, you got the real estate market. You got people right now. People real big is Airbnb. So I guess that's another side of the real estate, but it's more hospitality. But then I wanted to do something where I knew I was gonna not like. I was like, hey, I don't want to have to leave the house today. So what can I do that I can make money and not leave the house? So I started investing in the stock market. Did some research, found out about dividend investing. So I try to buy stocks that pay out a dividend, whether it's every month or annually or semi-annually or whatever. So that's pretty much my background of how I got into it. I actually started researching maybe my first time when I really fell in love with it was about maybe 2005, 2006. I used to sit at home and watch the Money Channel as much as I could, and I taught myself how to read the ticker at the bottom, and just learning different brokerages to kind of go through who had the smallest fees. But now it's so much easier because everything is right through your phone. You got all these different apps like Webull,
right.
M1 Finance. So that's kind of the little background I got in it. Okay. I'm not like a professional investor, but I do have some nice investments going on for myself right now.
Okay, dope, man. Thanks for that background history about yourself. So I do want to, back up a little bit because you done said some stuff that we might need some definitions on. So okay. Let's talk about a dividend. You know what I mean? Like, what is a dividend?
A dividend is pretty much a payout so when you own a share of stock, right. It's a percentage of whatever that stock is worth per share. So let's say, for example, I buy a stock that is, let's say Ford, and it's $10, and they might have a 5% dividend. So every time they pay out on their dividends, whenever they do their growth announcement, what they'll do is you'll get that 5% per share of each share that you own. So you'll get 5% of that $10 times whatever. So if you got 100 shares, then you'll get 5% of those 100 shares.
Right. So your dividend amount so the dividend amount is the same for everybody, but the amount that you get varies on how many shares you actually get.
Well, the dividend yield varies on the price of the stock when you purchase it.
Right.
So I it at $10. So I would get 5% of $10. You may purchase it at $12. So then you would get 5% of $12. So it just depends on when you purchase the stock, the price of it, and what the dividend yield is holding at that particular moment.
Right. Okay. So okay. All right. Well, let me ask you this because that got me a little bit confused. So say I buy it at $12. I thought the best thing to do was to buy lower. So for example, say the stock gets, I don't know, it gets to where it's at $1. I'm only gonna get 5% of $1 even when it goes up.
So what happens is when it comes to dividend yields, when your price goes low, your yield goes high. When your price goes up, your yield goes low.
Okay.
So let's say, because the way it breaks down, so we're not gonna reach so far as $1. We're gonna go back up a little bit. Let's say $5.
Gotcha.
So more than likely, if I bought it at $10 and my dividend yield was my dividend yield was 5%. If it drops to $5, that dividend yield will go up. So let's say $5. So if it's $5, we're gonna say it goes 10%. So now, if you buy it at $5, you're gonna get a 10% dividend yield. The reason it does that is because it has to balance out as far as earnings and payouts is concerned.
Okay, so the yield. All right, man. I'm trying to make sure I'm understanding you. That's a lot at once. All right, so the dividend yield. So the more that the stock goes up from the amount that you purchased it at, the more dividend yield percentage you're gonna get. Is that
right?
Okay.
So what happens is it'll balance out. So if you bought it at $5 and I bought it at 10, I'm getting 5% of my 10, and then you're gonna get 10% of your 5.
Right, because basically
we have to get the same amount.
Right. So that's why it's good to purchase low and then the stock go up.
Right.
Because you actually get more percentage on the dividend yield side. You get more percentage of that dividend check that comes to you annually, monthly, and things like that. And that's why it's also... Oh, okay.
I was just going to say, the thing about it is... hold on one second. All right. I didn't want this thing to fall off of here. It looked like it was doing some magic. But the thing about it is, you never know what's the bottom. That's the problem. You can't guess the bottom and you can't guess the high. So it is good to buy low, but so like what I try to do is I kind of got a mental number. So if when I started buying my Ford stock, I told myself I saw it falling. It was one day it was $10, then it dropped to $7.50, then it held at $7 for a while, and then it dropped down to $6.40, and then I told myself, I said, okay, well when it gets to $5, that's when I'm gonna buy 100 shares. Because I was like, I'm just going to spend $500 so that I can get 100 shares. But the thing is, even when I bought that stock, it still kept falling. So it was like, I wonder if I could have waited had I made more money off this stock. The thing is, you never know where it's going to go.
Right.
So really, it's really gambling, but it's more educated. Because now you can look at balance sheets. You can see what type of contracts they got. You know, there's a lot of stuff you can research online.
Of course.
You can just...
Right. Okay. All right. So, let's talk about how you invest. I know you mentioned like some of the, like you don't got to go through a brokerage anymore. You can go through like a robo advisor, like Acorn, Stash, like a lot of these different apps.
All of those are brokerages.
They are that, but basically you can just download it on your phone now. You don't have to.
Yeah.
Right.
Most of the brokerages today in 2020, they all have an app. Whether it's Fidelity, it could be Robinhood. You got M1 Finance. You got Webull. Charles Schwab, they have an app now. E-Trade, they got an app now.
Yeah. So
mostly all of the brokerages have apps, and then most of them are all trading commission free when you do it on your phone, on your app. So this is the best time to jump into the stock market, if any, to be honest, because it's so easy. You got all the power right here at the tip of your fingers. You don't got to call nobody. You don't got to send an email. You just get on there. I want this. You got the money. You swipe it. Boom.
And you don't really even have to have any money to do it. Like some of these apps are doing roundups where it's like they just collect change from the amount of money you spend, you know, like, yeah. So that's what's up. So which one do you use? Do you like what brokerage?
So I kind of split mine up a lot because I own crypto. I like to do dividend in stock. Then I've been getting into some growth stocks. So what I mainly do is all of my dividend stock purchases, I do it through Robinhood. All of my growth stocks, I go through Webull. And then I'll do all my crypto I do on Coinbase.
Got you. Okay. So I want to mainly focus on dividend stocks. for the purpose of this. So okay, so for some of your, like for example, for some of your dividend stocks, I know we have spoken previously about REITs. And are those dividend based? Some of those, or all of them?
They're called, so a REIT is a real estate investment trust. All of those are dividend based because what happens is when you purchase a REIT, it's like being a landlord or investing into the real estate market. It is investing into the real estate market. So what happens is every month that these REITs or mortgage brokerages, when they get paid, whether it's rent or whether it's like a lease or anything like that, all of that money gets compiled. Then they do earnings. They say, okay, on the 15th of every month, we're going to tell all of our investors how much we made. And then at the end of the month, they'll cut you a check for the percentage of the stocks that you own. So I love REITs. It's a really scary time right now because of, the pandemic that's going on, and the government's allowing people to not, pay their rent right until everybody gets back to work. So all of the REITs are really low right now. But because they are so low, if you can spare a couple dollars that you're not afraid to lose, then I would say go ahead and throw as much into REITs as possible, because guess what? When the market comes back, people are going to get to paying their bills again, and that's just going to be like a big bubble. It's just going to grow like this.
Right.
And hopefully you be inside that bubble when it started to pop.
Right. So I want to talk more about REIT specifically, because so many people think when they think of stocks, they only think of McDonald's, Nike. They don't think that you can actually invest into a property and get and that's considered a stock as well. You get a dividend share from that as well. So and just to go back a little bit about dividends, like you said, it's a basically like an extra income. I watch Earn Your Leisure, and basically one of the guests they have had on their podcast, they talked about how the way how they pay their phone bill is by investing a certain amount of shares into their phone company, and the way how their phone company basically pays their dividend shares is quarterly. So the fourth month of every year, basically, they don't have to pay a phone bill because that dividend amount covers it. And that's basically how you do with the dividends and things like that. It's basically an asset that helps. They should be helping pay an expense. You know what I'm saying? So
but that's exactly, people that's considered the 1%. That's what they do. Pretty much whenever they want to acquire something that's going to be a liability, they purchase an asset that's going to continuously pay for their liability.
Exactly.
So it's like a wash. You never really have to spend money. You just keep making it.
Exactly. Yep. So back to the REITs. They do have hospitals, that you can invest in too. So I look at it like I just invested in one that's gonna make money.
Yeah, most definitely.
I got to cough a little bit. I don't got nothing, but yeah. Man, yeah, talking so much. But yeah, so I just invested into a medical building REIT where they have multiple different hospitals and clinics and things like that.
Okay.
I forgot the name of it, but yeah, and one thing that I just learned to do as well is a portion on I invest in Robinhood, and they have a section where you look at how they've been doing for 5 years. And that's what I basically make my decision based off of. If it's haven't been doing well for the last 5-10 years and it's in red, I'm like, nah, let me not invest in it. But if it's doing bad right now, maybe for the last couple of years, but it's in green, I'm like, okay, let me go ahead, figure what it's about. Yeah. So REITs basically, you can invest into multiple different properties, hospitals, hotels, all of that, apartments.
Yeah. I've owned probably 5 or 6 different REITs, and I think some of them is like commercial. You got apartments. I actually really been investing really hard into hospitality. I think it's PK is one. Apple Realty is one.
I've heard of Apple.
They actually own and run like the Marriott, the Hyatt, things like that. I've been buying casinos lately, like Caesars, MGM. I think what was the other one I was gonna get? It was I think Sands Casino. I was gonna try to get in that one, but yeah, once Vegas opens back up and people start traveling again, another good purchase right now would be airlines, but that's not a REIT, but you know, still would be. That's another good purchase. But yeah, as far as the REITs go, I want to say my favorite one is Gladstone Investment. I think their ticker symbol was good, GOOD, and then I also like Gladstone Commercial. They're really good. Then my other favorite REIT is Realty Income, ticker symbol O. That's a really good REIT. They own a lot of real estate. I believe they own like nursing homes.
Right.
Yeah. So they get all of their money from like nursing homes, the medical industry. So.
Okay, that's dope. Yeah, like I recently, not even recently, I did it about a year ago. I invested in Fundrise, which is basically a REIT company. They invest in multiple different properties along the East Coast. And I ain't even put no more money into it. I put the initial amount that you have to have just to invest, and I got like additional like $30-$40 that ain't even my money. You know what I mean? It's just I've been investing and I've been reinvesting reinvesting the dividend, and now now that I'm more knowledgeable, I've stopped that because I'm like, nah, I need that, you know. But you don't even realize that REITs are usually a higher dividend percentage than like a regular stock. It's like usually 8 to 9%, where a regular stock might only be 4%.
Yep. Now the only thing about that is when you see those really, really high dividend yields, you got to do your research on that company because you want to make sure that they're not spending more than what they're bringing in.
Right.
So like some companies, let's say per month they make $500,000, but their expenses or their payout is about $550,000. You know, they're not going to be able to sustain that type of business for very long because they're spending over what they're making. So that's the only thing. But most of those companies are pretty trustworthy. They're going to be around for a while, so it's pretty good. Like I really like REITs. That's mainly because I want to get into real estate. I want to start flipping homes as well. So this is my version of getting into the real estate market without actually having to own property yet.
Exactly. Yeah, because you're an owner, but just not a physical. You don't have the physical property. Right. And that's another dope thing about investing in stocks in general. You're a business owner. You know, you own a percentage of that company. Like you get to vote who becomes the president of that company, who's on the board. You know. So yeah, that's pretty dope. So as far as like getting started, somebody who's just brand new getting started, I would think that they can just download Robinhood and just begin researching. What would you say for somebody that's getting started?
Somebody that's getting started for the first time, never done anything before, I would recommend Robinhood. Their platform is really easy to use. The interface is simple. So I would recommend Robinhood and have them go through that so that they can learn. But the only thing is with Robinhood, you need to have a secondary source where you can go and do research because sometimes their numbers don't always be correct. I've noticed in the past that they might say a dividend yield is it might be like 5.4%, but if you look it up, their real dividend yield might only be at 3.7%.
Oh wow, I didn't know that one.
Yeah. So sometimes their numbers be off a little bit, but as far as user friendly usability, Robinhood is the way to go, because if you don't know much, you can at least start off and learn there. Webull has a very intense mapping system. So like their user face is not as simple. It's easy to use, but it's not as simple as Robinhood. Mm-hmm. But their graphs and charts are a little better, because you can get a little in depth with the company than using Robinhood.
Okay, cool. So let me just say this too. See if you agree with me, basically. So like, I done had somebody hit me up being like, hey, tell me what you know. I'm trying to start investing. That way I can invest it, buy my own apartment building, because I want to start charging for people for rent. And I think this is going to be my way of getting rich. It's by investing and then buying an apartment building. So we done spoke on multi-families, and, you know, I'm not going to get into all of that. But is investing get rich quick? Is this a get rich quick thing? Will y'all be rich in 3 months? And you know what I mean?
So the stock market is not the get rich quick scheme. The stock market is definitely the long game. Like, when you start investing in the stock market, especially when you get into dividend stock, this is the long game. Be prepared to play this game for at minimum 5 to 10 years. Yeah. At minimum.
Is this a down deposit on the house type of thing? Like, should I be like, oh man, I need a down deposit on the house. Let me go ahead and invest.
Well, okay, so it really depends on how much money you dumping in for you to get that fast return. Like, if I have $7,000 to spare, and I can afford to go buy 10 shares of Tesla, and then wait for them to jump up to 900 and then jump out, yeah, it might be worth it. But then you have to pay taxes on that. So, and you could probably, you might come up about $500 quick. But as far as like getting rich, no, this is not that. This is something that you're gonna have to do to take time, and just build it. And you gotta learn as you go. Don't be afraid to take a chance or make a mistake. The other day, I saw a stock that was $1.30. It dropped down to 50 cents. Then within 2 hours, it went right back up to 90 cents. And then it came back down, and I bought it on the way down. I bought it at 64 cents. I bought 100 shares, so I spent $64. And I was like, I'm going to wait for it to go back up. Well, I played myself, because I spent the 64 to buy 100 shares, and then it never went back up. It just kept falling. So I just kind of held on to it and took the loss. But meanwhile, all of my other stocks was outperforming. Every stock that I own went up like $2. So even though I was losing, $10, $20 off that stock that I bought, I was making $200-$300 off all my other stocks.
Got you.
So this is definitely, I'm gonna say, this is not the get rich quick. Unless now you can get. I ain't gonna say you can get rich quick, but I'm gonna say if you already rich, you can get richer.
Right, but if you somebody that's lower to middle class, you know what I mean?
Yeah.
Like a lot of African Americans, this ain't the come up out the hood, right? Next year.
No. Well, it can be to come up out the hood,
right?
But not within a 3 to 6 month period. No.
Got you. Right.
But if you a person that's like if you're 20 years old and you consistently invest, by the time you're 30, you can probably go move anywhere you want to move. You can come out the hood for sure, but it's gonna take from 20 to 30 of consistency.
Not 20 to 21.
well, 21 to 30, but you got to be consistent in those 9 years.
Right.
Ain't no, I ain't gonna take this money out to go buy this car or take this money out to go purchase this. Like, no, you just need to leave it there, let it sit. Now, if you do it properly, like my goal for the end of this year is to invest at least $10,000. I started in January, so by December 31st, my goal is to have $10,000 into the stock market.
Gotcha.
Now, mind you, if I was to do that for the next 10 years, 10,000 can turn into 100,000.
Right,
now I can take some money out and go put a down payment on a house.
Right.
At that point.
Right.
And then you can use the other money that you got as collateral for like a mortgage.
Right.
Once you show that you like I got $100,000 in stock, they gonna more than likely, if you got $100,000 in stock, your credit score is probably up more than likely, and they're gonna be like, okay, we trust that you gonna take care of this business.
Right. Okay.
But I don't see nobody getting rich and buying homes and apartment buildings within 3 months unless they already. Now, if you some person that acquired $100,000 from maybe a family member passed away or a settlement from something, and then you just throw it in the stock market. Now, what you can do is if you buy all dividend stock, you can generate enough income off $100,000 to where you can make about $2,500 a month. Now that could be a way, but it's not rich.
Nah, it's still not rich. Nah.
That's not. I'm not working for the rest of my life rich. That's just I'm better than I was yesterday.
Right, exactly. So and I just really want to speak on that because a lot of people think the stock market is like, man, I said 20 to 21 because basically I was emphasizing this isn't something that you about to get rich within a year, 3 months, 6 months, maybe not even 2-3 years. You know what I mean? It's something that just develops over time. And another thing is like, so I heard some people saying that they like scared to invest, but they have a retirement, and that's investing. You giving a percentage of your check in a way, it's investing. You already investing when you investing into a 401k. It's different slightly, but it's basically the same damn thing. You counting on your 401k to be there, it's the same thing. So to me, it's like, it's no reason to be afraid of investing, and it's not a reason to think only investing is about to be your way of coming up. Like, I think definitely you can come up from it, but like you said, not before 10 years, probably 8 to 10 years, At
least. And if you really consistent, you can probably change your life within 5.
Right.
If you gotta be really consistent and diligent, ain't no popping bottles, ain't no Hellcats, ain't no purchasing Hellcats. Like, if you can be patient and take everything you got and just boom, throw it in there, you can really make a difference.
Right.
You change
and not just throwing it in there, because you got to research it too, because you could be throwing it in the wrong places.
And that's true, but that's what I'm saying about, because once you're consistent, you learn. You kind of get the hang of what you trust. So one thing I really like to do is going kind of back to what you said about what would you tell a person who just started. I would say, download Robinhood, but I would purchase things that revolve around my life. Like, for instance, if I was a person who worked at Ford or GM or Chrysler, I'm buying that stock. That's going to be the first stock I buy because that's the company who paid me. So I'm going to buy that stock. I'm going to get a couple shares of that. And then if I like to eat out, maybe I'll buy like a Darden Foods. They own like Red Lobster, Aspen Creek, like different restaurants like that. Joe's Crab Shack. So if I'm a person who likes to go out to eat, I'm gonna invest in certain stocks that where I'm gonna make my money back. Or somebody, I know little kids or people who have children that like to go to McDonald's. I'm buying some McDonald's stock. I know a lot of people who shop at Target or Walmart or Amazon. If I got an iPhone, Apple should be a stock that I own.
Right.
If you love to purchase Jordans or Nikes, or if you're a shoe head, you should probably get into owning Foot Locker. You should buy Nike. You should you should try to buy Adidas or whatever stock that you
can
get.
buy the REIT where it's located at too.
Or buy the or buy the REIT where whoever owns that property. Yep, that's another good one.
Yeah, so that's dope stuff. Yeah, very very informal. I'm trying to think of any other questions that I might have even for my personal self. So well, I got one. What about like shares? So what if I just keep buying like 1 to 2 shares from everything? Should I not do that and just be like, nah, instead of buying 2 shares from like 5 companies, should I just focus on one company to buy it from? Should I try?
No, so you should always diversify, and you should diversify throughout the sectors. What people don't want to do is don't just invest in REITs. You know, I get that the real estate market is plentiful. People gravitate to it, but the problem is if the real estate market fall, then you lose everything. But if you diversify, if I own some REITs, if I own some energy, if I own manufacturing, if I own tech, if I diversify, say like, so for example, what I do is I go based off of how much I want to invest, and then what sectors I already own, and what sectors I want to get into. So what I did was, so I break it up per week. So I might say this week I'm buying nothing but REITs or real estate investments. Then next week I might get into retail. So like I think 2-3 weeks ago I bought a bunch of Bath and Body Works. I bought some Foot Locker. I got into the restaurant industry. I bought some Darden Foods. I bought well, it was another restaurant company. I can't remember the name of it off the top of my head, but I bought another restaurant company. Then the week before that, I bought a bunch of energy stuff. So I bought some oil. I got into some crude oil. I bought some energy companies. I bought a company that does solar panels. They manufacture solar panels. I bought some pipelines. So Pabina is a good pipeline. I bought like 2 or 3 pipelines. So I bought a lot of stuff dealing with energy, oil. I bought a company in Russia that was dealing with coal. And then before that, I was buying REITs. And before that, I was buying manufacturing because I own Ford, I own GE. And then when they made the announcement about the airlines getting the loans or whatever, or the little money, the stimulus money that they're going to get, I bought a bunch of airlines too. So right now, I think I own about 45 different companies right now. But I try to buy like 5 companies in each sector. So I got real estate. So I know I own real estate. I know I own energy. I know I own hospitality. I know I own restaurant industry, and now I'm invested in the retail industry. So I'm pretty well kind of spread out and diversified. So to answer your question, yes, I think you should buy 1 or 2 stocks here and there. But if you can afford it, I don't know how much you invest with it. If anybody can afford to invest every week, pick a different sector to invest in. Unless you just catch a deal. Like sometimes I get on and I have a mindset that I'm about to get me some real estate, but then I might notice that the cruise lines dropped really low. So like Carnival Cruise and Norwegian Cruise Line, they dropped really, really low. So that was kind of like a deal. I was like, oh, I can't pass this up. So I got a couple of those, and then the other day I was gonna jump in energy, and then I saw the retail market was kind of up and down, and I found a couple of stocks in there that I could buy for cheap. So I bought a bunch of those. So what I try to do is spread out my money. I kind of go based off of how much I got to spare. If I know today I can only spend $50, then I'm not going to buy a bunch of realty income because I can only get 1 share because they like $52 a share. But I can buy a bunch of Ford because Ford is only $5 a share. So I can spend $50 and get 10 shares of Ford instead of spending 50 and get 1 share of realty income. So I kind of try to go based off how much liquidity I have,
of course,
in each account.
Okay, that definitely makes a lot of sense. Say if you somebody that does music, is there any stock with that?
Like labels or anything. I don't think none of the labels are publicly traded.
Gotcha.
That would be dope.
It would be dope. Yeah.
Yeah,
sure.
but I mean, like, you can get into like Amazon. Amazon got the Amazon Music. You can buy Sony. I mean, I think everything that you can purchase dealing with music would be more of like equipment or brands, like Sony, XM Radio, Sirius Radio, Amazon. I'm trying to think, Apple. Like, you can invest in Apple. So I don't think nothing really. I mean, unless you know something about it that I don't know.
Nah.
I don't really know what stocks would be like just specifically music, except for those little companies I just named.
Or like I'm sure like Beats probably has a stock.
Well, no, because Apple bought Beats by Drake. Yeah. They bought it from Dr. Drake for $1 billion. So now Beats is owned by Apple. So if you want Beats, you got to buy Apple.
Right. I got you.
Yeah.
Okay. All right.
So I got a question for you. Do you know how many companies you own?
I'm gonna be honest, I don't. I was actually thinking about that once you said that, because when I thought of diversification, I've always thought of like different company. I never looked at it as different sector. You know what I'm saying? Okay. So like I know for a fact that like I got like I actually do invest in Sirius XM, and I do have a few REITs, and I have let me think. I think I got a couple of retail as well, but I just, like I said, I focus on different stores. So I was just thinking, like, for example, I would think like, okay, I'm gonna get Nike, I'm gonna get Jordan. I wouldn't think, man, I need to get Nike, Jordan, and then after that, let me go to the darts restaurant thing, like you were saying. You know what I mean? I was just thinking diversification as far as it's a different company.
Different companies.
Right, but
but make sure you try to diversify, because if you just purchase, like, I'm not saying you did, but if somebody did just purchase retail, just like this pandemic happened, if you only owned retail, you lost a lot of money.
Right.
If you only owned real estate because ain't nobody paying their rent, you losing a lot of money. Say somebody only owned airlines, they losing money. If you only own cruise line, you losing money. But you know who is winning? Amazon's winning. Google's winning. Walmart's winning. So those big box stores or those online box stores, those is where it's at. And honestly, I'm starting to feel like that's where a lot of people gonna start leaning towards too, because outside of it being Derby, people ain't really been going nowhere.
No, I was
Derby weekend.
Yeah, I was trying to figure out, man, like I just bought a medicine ball. I was gonna look at the company on my medicine ball, because I was like, man, I need to start investing in home gym equipment. You know, figuring out who owns the stock to that, because that's really coming up. Because I'm looking at the prices of some of the home gym equipment, and I swear it done skyrocketed. You know, so yeah, you know, definitely noticing different things. I've been trying to get more into technology.
Right.
Yeah, trying to learn how to invest more into that. So, are you familiar? I know you say you do crypto. Do you do like Forex or anything like that?
No, I've never done Forex before. I know some people who do it, but I don't really know much about it. I try to stay where I'm at.
Nah, I feel you on that.
I like the.
Okay. All right. I ain't gonna hold you for too much more longer. If you wanna maybe just say a little bit, a brief little summary on crypto, I guess what it is.
Oh, crypto. So, cryptocurrency is pretty much electronic money. Everybody's kind of, it's like I won't call it a fad, but it is something that's coming down the pipeline that is about to really, I think, shake up the way that we do transactions in the world. I think it's going to really shake up how we start purchasing things, because now it's to the point where you can take a Bitcoin and you can go buy a car, or you can pretty much purchase things online and get them shipped to you without even leaving your home. So I really, to be honest, I think it's gonna revolutionize currency, but it's also kind of a scary thing as well, because I worry about hackers. Like, I just feel like, say I'm a person that's got 100,000 Bitcoins, and once we start switching to using that, there's nothing for somebody to just hack into your computer and empty out your crypto wallet. So, but I mean, there are things. So that's why. So that right there is kind of why they've been slow to do it, because they're trying to figure out a way that the feds can kind of back up or ensure that type of money if something like that was. But really, cryptocurrency is electronic money that you can use to purchase or trade online or over the internet. I particularly, so Bitcoin is the most famous one. What I've been buying is Ripple coins. XRP, that company is going to be the structure in which we are able to transfer crypto from electronic money to paper currency.
Got you.
So XRP is Ripple. So I own a couple Ripple coins right now. I'm actually really happy at the amount I have, because it's been fluctuating. But what's going to happen is they're going to present that structure so pretty much the bones of the structure, so that you can say, hey, Troy, I got 10 Bitcoins. And I'm like, well, how much is that in dollars? XRP is going to be the structure in which we would know, okay, 10 Bitcoins is about $30,000. You know what I'm saying? Give or take. It depends on what they're at right now. I haven't looked today, but I think the last time I checked, they were at like 7,900. So, yeah. So if you got 10, really that'd be like 80,000 for real. If you got 10 Bitcoins, that's like $80,000. But so XRP would pretty much be that middle thing to translate. So it's like a translator. So I own the translator.
Got you.
That's pretty much it is, yeah.
Okay.
Have you got into the crypto market?
No, I haven't. I'm gonna be honest. I be looking at everything outside of stocks as like scams. I be thinking that it's a scam in a way, man.
It's a scam.
Yeah. Now I will say the crypto thing, I can kind of believe in that a little bit more than the forex trading, because forex trading, you know, we see like 1,000 people on Instagram like, hey, let me help you with forex trading, be on my team. You know what I mean? You don't really see that with crypto. With that, that's why I be thinking it's scams.
That's what forex is doing. The forex market, all of these younger kids is getting on there and teaming up and stuff, and they're thinking that they're going to get rich quick because they're doing forex. Now I don't really know a lot about it, so I really won't speak on it too much. But I do know that it ain't that easy.
My biggest thing, I don't like when stuff is shown as a get rich quick scheme, because the reality is there's no get rich quick schemes. Like, even if you say you get $1 million today with the lottery, you know what I'm saying? If you don't know about money, you're gonna mess it up. You're gonna lose it quick. So there's no such thing as a get rich quick scheme. So it's what I really try to emphasize, especially with my channel and stuff. Like, you're not gonna get rich quick. It's impossible. And if you do, you're gonna mess it up. You're gonna lose it. So you won't stay with it. So yeah, but that's about it. That's actually all that I have. Thanks for letting me interview you and give people knowledge,
Well, I appreciate actually having the opportunity to come on here and do this, because it's something I'm really interested in, and you're a really good friend of mine, and I really appreciate you allowing me to be on your platform, and hopefully we can get you over in Street Talk, with y'all. You can follow me on all social media platforms. I am Dynasty, so that's I-AM Dynasty, DYNASTEE. And then there's Dynasteemedia on YouTube. And if you want to get some merch, I am dynasty.com. So hit me up. It's your boy Troy Yacht.
Yeah, thanks.
Peace.
Thank y'all for watching. Rippin' running down the night. Rippin' running, wishing you were by my side.